Okay, so the first rule is basically we want to see a good amount of volume come in on a breakout. As we can see here, you know, this is a level of resistance where we got rejected right here, right here. We consolidated a little bit, then we broke it. We want to see lots of volume coming in. So this is basically volume. And whenever we break a resistance level, which is 104.127, this line right here, we got rejected here and rejected here. Third time we broke it, we want to see lots of volume coming in. Lots of buying volume. We want to see, a good amount of volume rushing in. And what that indicates to us is that this isn't a fake out. So when we see a break of resistance without lots of volume, there's higher probability that, it's going to be a fake out and not an actual, break of resistance. So when lots of volume comes in, basically, we get a higher chance of it being a real break and for us to continue, just going up. So we just want to see lots of volume coming in. That's probably a really important, part of breaking a resistance point. So another thing we want to see is, more buying volume than selling volume. So during the selling candles, we want to see less volume than the buying ones. And this, here, let me go accumulation. Here, wait, hold up. I'm just trying to get a good picture. So I think this rule applies more to, accumulation because eventually when we start making, higher lows, we want to see that, we don't have, it doesn't show us the volume, but I want to see more buying volume. So, on buying days, I want to see more volume than if it was on a, on a selling day. So I think that's key, especially when you're playing, accumulation, which is almost all of the swings that I play, but we want to see, a lot more buying volume than selling volume. So then the third thing is we want constant retests. So this is the first retest of this resistance right here. So let's just say we want to scalp this. So this is the first retest. So we're watching for this level to break. Then this is the second retest. What we want to see with the retests is that they don't have as much volume as the break. So once we broke, we saw a lot more volume come in than the retest. So this is the first test. This is the test of the resistance, right? So we got rejected here. We didn't see nearly as much volume as we did when we actually broke. So when we're watching for a break, we want to see that we see a lot more volume than the tests. So this was the first test of resistance, second one, and then on the third one, we saw lots of volume come in and we finally broke. Then the fourth one is we want the consolidation to have, you know, a good amount of volume, but not as much volume as the break. So just like I said, the tests and the consolidation. So this is consolidation right here. So we consolidated before we actually ripped through the break. We want this to obviously have less volume than the break. We want the break to have more volume than probably anything else before. So the test, the consolidation, probably anything. So this horizontal consolidation right here, we want the break to have a lot more volume than all of this consolidation that's happening and all of these tests. The fifth thing is we always want to be using our indicators with volume to determine, when to buy and when to sell. So let's just say if this was, our 200 or if this was our 9 and we were about to break it, we'll then be using this for support because, old support is new resistance and old resistance is new support. So once we broke this, we're going to be using it as our support. We want to see where, what it's riding, bands, basically all indicators, but those are pretty crucial, especially when we're playing, scalps and even swings. So hold up, guys, give me a second. Let me just mute everyone in the call. Okay, so yeah, so we want to always be using our indicators along with the volume, to determine what our best chances are, what the best thing, in this circumstance to do is, and when to, most importantly, when to buy and sell. The sixth thing is, oh, what was it? Um, okay, oh yeah, fake out. Okay, so, wait, here, let me pull up the list real quick. I have it open somewhere. Okay, here we go. So the sixth thing is, when we see a drop with low selling volume, it's most likely, a little bit of profit taking and it's not a signal to get out. So let's look at this, for example. When we see this, rejection from this resistance right here. So here, I'm gonna snip this and just so I can draw on it. So when we saw this here, let me put it. Okay, so when we saw this, when we saw this rejection right here, when we got rejected, we started consolidating. As you guys can see here, we consolidated for a little bit, but not a lot of selling volume coming in. That is basically we're just consolidating and it's not a signal to, get out. As if we were looking at this rejection right here, we saw more volume, definitely more volume than there was here compared to here. And we saw a long body candle and it was just a really, really fast top. Lots of, stop loss rate happening and we just completely started tanking. Over here, we consolidated slowly and we didn't see a massive drop like this. We didn't see as much volume as the last one. And of course, as you can see here from the bottom wick to the top, we were basically just consolidating within, oh God. So you could just mute anyone who's not muted, please. So when we consolidated, it was a lot different than here, and we didn't see as much volume, as much selling volume, and that's key to consolidation. We don't want to see lots of selling volume, and we don't want to see massive, break of support like we saw here. We just broke support, kept breaking, broke this too, and we want to see, we want to see it holding, and we don't want to see as much selling volume. We want to see something like this, low volume. This is a bull flag, so we see the consolidation pattern, almost the same thing that happened here. So, we consolidated a little bit, then we ripped. And we want to see low volume, and we don't want to see it breaking, crucial support places. So like this, we don't want to see it breaking this point right here. If we broke under this, it's probably going to head back down to this area right here. And it held it, which is what happened on here. So we held, our area of support. And, we started gaining momentum, and with volume, we just absolutely ripped. We just broke out like really nicely. This is perfect. So we saw, consolidation, not as much, selling volume, and we were holding our support areas. This would have been a stop loss like it says over here. So we stop under, we stop under our support level. This is our support level. We would stop out under here because we don't want to hold. It's just going to keep going. Lots of people are going to stop out here, just going to start tanking. So then the seventh rule is, let's see, high selling volume. So just the same thing. This is where we notice our exits. Let me get a picture. So what we don't want to see when we want to exit, so we always want to have, especially when we're playing breaks, when we get in before the break, we want to have a stop loss so we can, we can stop out at support. So we're watching this level right here. We want this level to hold. We want to stop out under because this is our previous resistance. We broke it. Now it's going to act as our support. So what we don't want to see is what we don't want to see is lots of selling volume. So as we saw here on this candle right here, we saw a good amount of selling volume, and we saw just really massive break of support, and this is definitely a bearish signal to get out right when we broke the support. Just get out. So this is how we plan our exits, plan whether to hold right here. This would have been good to hold and whether to sell. We want to hold support because remember, especially with scalps, when we break our support, lots of people are going to get stopped out. That's the key area because people know where the support is. We want to always stop out under support. And sometimes if there's two support areas close to one another, I don't worry about it too much, but when there's, a really, psychological, support area, like the $1, for example, we definitely want that to hold. And that's what happened here. This is where we would exit. This is where we would hold, for a nice run like this. And then finally, the last and final rule is basically when we want to play these scalps, we want a breakout to happen like this. We want to see lots of volume coming through. We want to use our indicators to help us determine, when to buy and when to sell. And we want to use, obviously, volume to help us think, what's going to happen after this break. Are we going to fake out? Are we going to, is it going to be a strong break? And this, looking at it from, from this perspective, we see massive amount of volume coming in, more than any other period during this consolidation, and we see a nice break without, much pullback and a lot of retests. So this would have definitely been a nice entry over here or a nice hold depending on where you would have gotten in. So yeah, that's going to be just the short, lesson on that. And I wanted to go over just one more thing. It was ears, the swing that Many is swinging right now. Here, let me pull up the links real quick because I have it somewhere. Here we go. So this was one of the pictures that he used. So obviously, lots of insider buying for this stock. There's a catalyst coming up. It's a phase 2 initiation that was announced, like a couple months ago, and it's supposed to be completed in Q1 of 2021. So from the chart, as we can see here, this is the daily. So we can see that, the MFI was overbought. It rode like 3 times, and now it's finally curling up. And if he got in now, this definitely, looks like an early stage to get in, just like here. It's definitely, pointing in the right direction. If we're talking chart wise, it's forming a U type of shape chart, and the MFI definitely looks perfect for a reversal for sure. It's holding the 9 really well also, as we can see here. The 9 is this light blue color line, and then the 20 is the dark blue one. But yeah, this chart definitely looks nice. Definitely want to see it break 3. If this breaks 3, it's gonna be a nice swing. But with the catalyst all in shape, and I think there's another article link. Find that. Here it is. Insider buying, a catalyst coming soon, and the chart definitely looks, primed. Yeah, this swing is definitely pointing in the right directions. I don't have a position in it yet, but I'll definitely be looking, for something to get into early next week. I'm looking for swings right now, but I haven't found anything that exciting. I'm looking at PLIN, related to China and food, like also a sympathy of GRIL. So I'll let you guys know if I do take an entry in that, or if I announce it for challenge. But yeah, for now, I guess, that's pretty much it. Just let me know if you have any questions. I have to get going now, and yeah, yeah, I'll see you guys later. Bye.